All right, let's look at this. Okay, what are we looking at? Nice doji with the expanding candle. That's what you want to see. You see, we would have missed that if it wasn't for the doji. And I was just looking at some trades and got carried away this morning looking at a bunch of past trades. Our bears did really good and our bulls did good. So I want to jump into some of these, but reminder, it is earnings season. This is one of the heaviest weeks. So turn on earnings. Make sure you have that earnings flag. And remind you that over and over and over today. So earnings flag. So let's jump into this. Let's go into markets and I'm going to go into the spiders and let's just jump right into it because I want to get through the markets. And my tags are up. We had no trend on the spiders. What do we have today? That Doge. And the lesson today is going to be on setting up the charts. But first, there's that Doge. I want to focus in on that. The Doji, very wide for the first half an hour today. That is very wide. You guys see how wide that Doji is? When you go to regular candles, what do we call that candle right there? Engulfing. Started higher, trended lower, and I clicked the wrong plus sign here. Let's click the right one. 7/27 July, the last week of July, looking at the high open above Fridays, and the low is already below Friday. That's called an engulfing candle. The main point is this. Did you put in your dash lines? So those are going to be some important levels. And when I talked about that last Friday, we were talking about this right here. These important levels. When the 10 is broken, especially right here, I'm going to move this line down to right there from last week's low. That's usually the target. We break that, we're going to go to the 20. That's usually the case. Not always, but usually. Okay, so those lines will help. Now, the day's early. The week is early. It's the last week of July already. Wow. Now to set up your charts, this is an easy lesson for today. If you're brand new, you guys all see the little stack up here? Let me get the arrow. Right there. Layouts. If you click the layouts down here under community layouts, look for Payday Cycle G Live. And by the way, if you want to use Micah's Payday Cycle, same thing. The only difference is I have moving averages on my Heiken Ashi, MACD, and some moving averages. When you click it, it'll say, do you want to load this? And it's basically Micah's payday cycle with moving averages and volume with the 50-day moving average. You hit apply. And then you can come back over here and you can copy it or overwrite it, depending on what it says down there on yours. And call it what you want. But once you save it, you copy it, it'll be in your layouts. See that up here? And I highly suggest you put a star next to it. When you put a star next to it, the first letter of the whatever name is will be right there. So when you log in, you click that and it brings you right to your layout. Another one you might want to do is sector performance. It'll be down here. Sector performance. Give that a click and then copy it. Because when you do that, it'll pop up in your layouts. Once you copy it, rename it, whatever you want, you'll be in your layout up here. You'll be able to put a star next to it. When you put a star next to it, you get the sector. See all these sectors and big ETFs? That's materials, energy, communications, financials, industrials, technology, staples, real estate, discretionary, healthcare, semiconductors, transportation, retail, and biotech. Where is the strength? Where's the money going? You can see some are up, some are down, some are neutral. But this is the market. This is the RSP. This is the market right now. I can type in your SPY if I want. And there's the SPY. You see the difference? So the SPY has a doji here. Not looking at the trend, can you see where the last high was as it's trending down? That was July 15th. So we're almost 2 weeks of downtrending here. Do you see how we're making lower highs and lower lows? Now, if I go back here and I say, okay, is materials underperforming or outperforming the market? I could come back here and check all these to see who's underperforming, who's outperforming, and what have you. But I don't want to go from right here till now. I want to go from this current trend. So what I do is I drag this over to where that trend started. This is the y-axis over here, right? Another way of doing it is you get to stretch the numbers down here. See, I'm grabbing these numbers and left clicking and dragging. Why that way it keeps this candle here and it brings this one over and it stretches it out. See that? But this is the top of the trend right here. That's where things kind of changed right after that doji right there. So now when I add my sectors, they all start there. So since the trend changed, materials is outperforming the market. I could go to energy, and we know energy is bullish, right? Energy is even stronger, outperforming the market. I could come in here to, let's say, semiconductors. Semiconductors is underperforming the market. This is the pro short. This looks like a breakdown. It does the opposite of the market. It's not an ETF, but when you see pro shares, it's a specialty type thing. You could trade this. So if you're bearish on the market, but you're in a 401k or IRA, you're not allowed to short. Guess what? You can actually short. You can actually short because it's a pro share. Short the S&P by buying this. When you buy this, it goes the opposite way. You guys see that over here? So one of the advantages we always tell people back in the past days is the advantage of being a trader, you can buy puts, you can short stock. And that means you can play both sides of the market. So if the market's bearish, you can still play it by shorting. Well, pro shares that are short ETFs allow you to go long because you're only allowed to buy. So if you buy this, it goes the opposite way of the market. Now, people that are in a cash account or 401k, IRA, that can only go long or buy stuff, they're actually buying this and playing the down move of the market. And by the way, if you buy this, not only are you shorting the market, but I have a question for you. Could you do covered calls against this if it has an option chain? Yes or no? Could you do covered calls? So that's a pretty good idea, right? Think about it. You're playing the downside of the market and cash flowing from it. Another question, if you are buying this, that means you're short the market and doing covered calls. Could you, here's another one, 3 times the ETF, it's cheaper. This one goes out. This one has 3 times the move, has more volatility. You get triple the cash flow. And could you also be doing the spiders, buying these and selling calls against this? So if you're long this and long the short, you're neutral, but cash flow on both. See, most traders just short this and sell puts against it, same thing. But now you could actually do both vehicles and be neutral to the market. Just a heads up, there's stuff like that out there. How cool is that? These are the market movers, XLG. It's going this way. So XLG definitely has more of an influence on SPY. You guys got that, right? In fact, I'm going to add SPY here just so you can see. Now, when I add it, see SPY, that is the market. That is the equal weighted. We already went through that. XLG is influencing which one? Is it influencing the RSP? No, because these are equal weighted. Is it influencing spiders? Yes. And I like to go back and forth from XLG to SPY because they're the same trend, aren't they? They peak and valley at the same time. So really, XLG has taken over SPY. Okay, XLG has taken over SPY. SPY is in the shadows of XLG. That's why we start looking at Wall Street IO at the equal weighted. Equal weighted meaning all the S&P stocks are only 0.2% each. Because if you go to SPY, there's 8% in NVIDIA, 8% or 7.5% in Apple. Look at these 5 big players. Those 5 big players, actually the first dozen, here's the first 50. They dominate the SPY. And why is that? Because some of those big players are right here in growth. And see how growth is all red from last week and cyclicals is all green? Let's start with technology. Very similar chart, still bearish. Semiconductors, bearish. See that? Red candle, MACD bearish. Heiken Ashi's doji, expanding to the downside, coming up on the 20. Communications doing a bear bounce. So this is again leads cam. We don't play this bear bounce because we don't know where it's going to turn around. Is it going to hit the 10? Is it going to hit the 20? Or is it going to turn around in the middle? But it's letting you know it found support, double bottom. And look at the resistance. So right away, we've got bearishness in growth and discretionary. And all these are influenced by a handful of the mega caps. Okay, any other, look at another stock. TSM, let's go look at TSM. So VB, did you see that seasonality tool? Yeah, see, there it is. So yeah, July's done. Because when you're selling options, you're not going to go out for the next 4 days. You're going to go out at least a month, right? So yeah, you don't need July, really don't. But if you want the seasonality for July, you could come down here to seasonality. And you can see it right here, right? And you can see what weeks per week. You can break down per week. If it's bearish or bullish on the so we're like 4 days left. And do you like the cone better? Do you like, okay, let me take a survey here. Do you guys like the band where it's red and green, or just the line or the cone? So here's Safe Strike's extreme. Notice September is a very volatile month. The lines, which I prefer because I just want the price and the strikes right here. See this? Or the cone that gives you week by week. Because you can see this is a very bearish week right here. So I kind of want to wait, like, right? I know by third week here, if it hasn't dipped down much, I'm probably safe because it rallies up, right?